Welcome to the Crypto News Recap podcast, your go-to source for all the latest updates in cryptocurrency. Join us as we discuss the most important news, trends, and developments in the world of digital currencies. Don't forget to subscribe to our podcast to stay up to date with the latest crypto news. In today's episode, we'll cover Gary Gensler's defense of SEC's actions against Binance and Coinbase, the impact of SEC lawsuits on Bitcoin and altcoins market, and Fiatjaf's collaboration with Zebedee to launch Nostr social media layer. Recently, Gary Gensler, the chairman of the US Securities and Exchange Commission, SEC, spoke out about the recent actions the SEC took against crypto exchanges Binance and Coinbase. The SEC has accused them of trading unregistered securities, marking an intensifying scrutiny of the crypto industry. Gensler made it clear that digital assets and crypto exchanges don't have any special privileges that exempt them from existing regulations. He challenged arguments that tokens that offer a utility beyond being an investment vehicle should be exempt from regulations. Some promoters of crypto asset securities contend that their token has a function beyond simply being an investment vehicle. Some additional utility does not remove a crypto asset security from the definition of an investment contract, Gensler said. However, he acknowledged that tokens exclusively built for use within their blockchain ecosystems could be exempt. Gensler also criticized claims made by crypto market participants, suggesting they lacked fair notice, that their conduct could be illegal. He argued that this claim was disingenuous, and that these actors might have consciously decided to risk enforcement action as a cost of doing business. The SEC chair also rejected the claim that crypto platforms couldn't register with the SEC, pointing out recent examples that contradict such arguments. While acknowledging that achieving compliance takes work, Gensler emphasized that it was not accomplished merely by seeking multiple meetings with the SEC without showing a willingness to comply with securities laws. Hey there! Today we'll talk about the recent lawsuits filed by the US Securities and Exchange Commission, SEC, against Binance and Coinbase. You might be wondering how these lawsuits affected the Bitcoin market. Well, according to options-based implied volatility metrics, the impact was not as significant as some might have anticipated. Let's take a moment to understand what implied volatility, IV, is. In simple terms, it's a metric that reflects investors' expectations for price turbulence over a specific period. It's affected positively by the demand for options, which are derivative contracts that offer protection against bullish or bearish fluctuations. When demand for options increases, so does IV, suggesting a heightened level of concern in the market and the potential for increased price turbulence in either direction. After the SEC news hit, Bitcoin's 7-day annualized implied volatility rose from 34% to 43%, which can be seen as a significant increase. However, it has since pulled back to 40%. On the other hand, the 30-day gauge increased slightly from multi-month lows, while the 3- and 6-month IVs remained largely unchanged. David Brickell, Director of Institutional Sales at the Crypto Liquidity Network Paradigm, suggests that there are no real signs of panic among traders. He believes that the lack of disquiet suggests that these lawsuits were expected and priced in. Meanwhile, Griffin Arden, a volatility trader at crypto asset management firm Blofin, states that the SEC's action is more damaging to alternative cryptocurrencies, or altcoins, than to Bitcoin. He suggests that the SEC's prosecution mainly targets altcoins that are identified as securities, which limits the impact on Bitcoin and Ethereum, as these have already been certified by the US Commodities and Futures Trading Commission. So, in summary, while the SEC's lawsuits against Binance and Coinbase did cause a slight increase in Bitcoin's implied volatility, it didn't lead to significant disruptions in the market. Additionally, it seems that traders were aware of the lawsuits beforehand and had already priced them in. The impact of the lawsuits is believed to be more damaging to altcoins, as they are seen as more vulnerable to regulatory scrutiny. Have you heard of Fiatjaf, the Bitcoin coder and creator of Nostr, a decentralized social media protocol? Well, he's teamed up with his employer Zebedee, a Bitcoin gaming and payments company, to launch a social media layer within their app. Interestingly, this partnership is a direct result of Nostr's development under Zebedee's arm for open source Bitcoin development, No Big Deal, NBD. For those who don't know, Nostr was created by Fiatjaf and Ben Arc, a Bitcoin hobbyist, and got the attention of none other than Jack Dorsey, former CEO of Twitter, in 2022. This led to a generous donation of 14 Bitcoins to Fiatjaf. Fast forward to 2023, and Dorsey gave a whopping $10 million donation to OpenSats, a non-profit organization for free and open-source Bitcoin projects, with half of the sum allocated solely to Nostr's development. Now, the integration of the Nostr-powered social media layer into Zebedee's app means that users can interact with millions of other Nostr users across different apps. This development further consolidates Nostr's influence in the decentralized social media space. Plus, Zebedee users can already join a waitlist for early access to the updated version of the app featuring the Nostr integration. On today's episode, we discussed the importance of complying with regulations for digital assets and crypto exchanges, how the SEC lawsuits against Binance and Coinbase had little effect on Bitcoin market, but may impact altcoins, and the launch of a Nostr social media layer on Zebedee's app. Thanks for listening and see you at the next one. Don't forget to subscribe.